Hello YouTube, welcome back to NSTA, and today in this educational video we are going to discuss a very basic pattern in Elliott wave. So by the title you already know it, it's zigzag. Now sometimes this pattern is kind of easy to recognize, but also it has a potential to become a complex, and we'll discuss that why. But let's see how does this format in the market and what is the formation. So without wasting time, let's get started. So in the market you will always have the up move and you will always having the down move. Those are the two criterias in the market you will be dealing all the time. All right, there's a sideways market, but this pattern is actually sideways market. Why? Because you have this impulse and whatever is going to follow is going to be sideways, right? So in that sideways market is actually going to be happening consolidation, and that's what we are discussing. We're having a consolidation, and today the pattern which we are going to discuss of the consolidation is a zigzag. So most of the time you'll be dealing in the consolidation, and that's why it's important to know these patterns, because after every completion of the consolidation you will form the next impulse, and that's what all of us wants to trade. If you want to double or triple the account, you are not going to triple and double account in the consolidation phase. You will be doubling the account when you are able to catch the impulses for the next move. It's always the impulse, correction, and the continuation. That's the basic concept, right? So we are here to discuss the zigzag. The name itself is clear, Zig Zag. All right, you can see kind of Z there, and that is the formation you are looking or you're supposed to find in the market. If you find something Z looking like pattern after an impulse, chances are you're looking at the zigzag, and I'll tell you how this pattern actually can develop and hinder you executing the next impulse. Because sometimes what happens, placing the buy orders there, the next thing you know is this. We'll discuss that later in the video. So how does the zigzag form? For the bull market, something you will always be having a three-wave corrective structure. So you'll be calling it ABC. Let's say we'll be calling it A, B, and C. Now this B wave doesn't go beyond this impulse, the end point of this impulse, and this C wave definitely go below the bottom of A wave or the end point of the A wave. And you see, and if you pay attention, whatever you're looking at here looks like the Z formation, and that's the name actually created. That's why Elliott called it zigzag. So this is the bull market corrective structure. The same thing happens in the bear market. After a down move, you will be looking for something which looks like Z, and maybe that's something which you're looking at. If you really pay attention and closely watch what's happening here, for the people who are not beginner here, the formation which has been developed from advanced pattern, you see, remember advanced pattern, I mean that's derived from this pattern. So if you combine these two legs, where this leg is a little more, this leg a little more, this leg a little more, it's still a Z formation, see? So that advanced pattern concept is actually derived from zigzag pattern from the Elliott wave, but to be very simplified and simple, because sometimes this zigzag gets complex and it's not easy to recognize, and plus Elliott wave is already the complex subject in the market, so they took some ratios, they took advantage of the situation and gave the easiest version of the pattern. They call it advanced pattern. So in this pattern, when this C leg gets finished, you are expecting the next impulse in the direction of the previous trend. So if the previous trend is down, you're expecting the next impulse in the down direction. If the previous trend was up, you're expecting the next impulse in the up direction. And that, my friend, you're looking at something we call zigzag corrective structure in the market. That is the basic version of it. All right, so if you go in detail, if you go in a lower degree, you will find this leg sometimes has a 5-wave corrective structure, sometimes it has a 3-wave. If you ask us personally, we have seen both, so it doesn't matter whether you call it 5 or 3, it has both. But this wave has the 5 waves into it. Similar with this 1 2 3 4 5, this also will be having 5 waves, and this B wave itself will be having a 3-wave correction itself. So in that case you will be having a 3-wave itself here. But if you are a beginner, let me tell you again, we warned you in the first lesson itself that if you're just starting, don't take so many steps at a time. If you're just starting and beginner, just focus on this formation. That's what we call a zigzag pattern. After the completion of this, you're looking for the next impulse in the previous impulse direction. And that's it. Now for the advanced people, for those who understand the concept, I'll tell you how this pattern actually sometimes hinder you, because most of the time when this A gets tagged, people tend to buy it in expectation to the next impulse. When it gets tagged here, people expect we'll be getting the next impulse. But what actually happens, you see, this will be having a 5-wave corrective structure within itself, and this will be having a 3-wave corrective structure, and this people understand as a zigzag at this point. But this, if you start looking from this points onwards, sometimes people might be struggling, because this is actually origin of the next wave in the direction of the trend. So people buy here and the market does something like which I have drawn here. Similar case will be here. You'll be having a 5 subwaves, 3 corrective waves, and the next impulse, people might be expecting the next impulse here, but this impulse actually continues because this was the origin of the next impulse. And that is the major reasons people sometimes gets confused a zigzag within a new impulse. Alright, so don't make those mistakes in the market if you are trading Elliott wave. If you are a beginner, just focus on the learning of the patterns, because that is what important in the market. This is a yes bank chart. To find a quick example, I have already come on that chart. If you pay attention what's happening here, you're looking at some impulse over there. If you pay attention what's happened after that impulse, you have a 3-wave correction which looks like a zigzag formation, right? And once that pattern is complete, you're expecting the next impulse in the direction of the previous trend. So that is a cell structure, guys. That is, if you go our previous videos, if you go to our forecast which we made earlier of the yes bank, we were making a forecast somewhere here that we will be focusing on this leg, tagging it, and then further downside. So that is one of the reason we were able to forecast that kind of move. This is a cell zigzag. Go to your chart, practice it, and down in the comment below, tell me if you have found the zigzag pattern for the upside market. So alright guys, that's all from our side on a zigzag pattern. I hope you found this video helpful. If you did, if this video gave you some education over the zigzag pattern, give this video a thumbs up and let us know your thoughts in the form of comments below. So before I close, let me tell you guys, we do have a one-to-one training course available on the website. So if you guys are interested in learning all the trading concept, all the patterns, and all the trading strategy which we use in the market, head over to the website and I'll see you with another update. Thank you so much. Bye-bye.